Hey, thanks for tuning in. This is a weekend review for the week ending July 16th, 2021. The monthly options expiration is over, and I think volatility is here for next week for sure. So let's take a look at SPY. We don't have a weekly reversal. This is just really set another all-time high, sold back into EMA 5. How many times has this chart done this? Right? Okay, it's not a top. But what I will say is you got your PPO bearish cross sell signal here, and we've now made one new high, pulled back, and another high, and pulling back on lower momentum each time. And one of these times, this gap down here at 400 is going to get filled. It's just that simple. You're still in an ascending channel. These moving averages and the slope of these moving averages is such that this trend can remain for a long time. So you don't need to be picking the high. You don't need to try to short. You don't need to be short anything. Just go cash, get your cash, wait for the dip. You also don't need to guess where the bottom's going to be. You can wait for a reversal candle, right? Like this bearish and then inside, up, back test of previous, right? You could have waited to go long here and you would have been fine. And again, buy the ETF, buy SPY. Wait for the buy signal to be issued. You don't need to be aggressive. And again, I think the gaps down here are going to get filled at some point. And look, you got them all the way down to 389. I mean, this gap is open, that gap is open, and this trend line going way back to here, 389 and the 200, will provide an excellent swing trading opportunity. Now, I'm not saying that's coming this week or next week, but at some point, we're going to revisit these gaps. And when we do, you need to have a lot of cash because that's going to be the next best swing entry. For this week, I would be a buyer at 422. That's it. I'm not buying SPY before that, and ideally 417 to 410. All right, give me the 100 again. We've just visited the 50 1, 2, 3, 4 times since March. It's not that good of a deal anymore. I want to see the 100 or the 200. Let's take a look at QQQ, which did give us a sell signal this week as well. We do have still this same ascending channel. You know, nothing's changed. We do have a bullish divergence, but we do have bearish divergence as well. And as long as we didn't set another high in momentum relative to the high that was set back here, this is and has to be considered, even though it's a higher high in price, a lower high in momentum, which is a bearish signal. Now, the bearish cross, head back to zero line. Even though these are rising, we would look to find demand down here, somewhere down here. You know, the 50 is a good deal. We haven't touched the 50 in 2 months now, right? Sorry, the 40, the blue line. The 40 is a good deal. We haven't touched it in 2 months. I'll put it with this gap fill, maybe even this fib at 345, and you got yourself a nice trade set up. And what you do have is bearish divergence. And when you have a bearish divergence, what is in fact a sell signal, not a buy signal, is the cross, right? So back here, this bearish cross, this bullish cross right here was really telling you the top. Like, this wasn't a good buy. This led to the lower high, right? So every time you get a bullish cross and there's a bearish divergence, that's generally a red flag. And it's happening this time too. Again, there's just no momentum, and you can see, you know, the distance between the blue and the red line was 0.26 last week. Sorry, 2 weeks ago, and then this past week, 0.24. So the bulls are losing momentum week over week, even though they set a new high. Not what you want to see. Again, no real red flags, right? Just an inside week. But I'm getting to the point where, this trade has been on for quite some time. You've got to lock in these gains. That's pretty symmetrical to me. And even if this is something like just an ABC up, right? We would find supply at this 363, which is the 1.0 extension of Wave AB. And we should find demand at 618 if this trend is to continue. And there's no reason to think it won't. This is a very, very strong uptrend. And again, somewhere down here at this blue trend line is your next chance to buy. Now we get into the more bearish charts where I'm still a buyer down here, but we are to start this past week we were way away from risk, and the only thing you can do up here, because you're at the top of balance, right? This whole time they've just been collecting shares or distributing shares. Time will tell who is winning, but when you get above this, one of two things is going to happen. You're going to leave the station, meaning it's a look above and go, and there's so much demand that and not enough supply that you're going to have to leave, or price is going to fail and you're going to come all the way back to the bottom end of balance and see if you can set a higher low. In this instance, we've set a marginal new high, and we've pulled back on volume, right? Bearish PPO cross, bearish PPO divergence, right? Another high in price and a lower high in momentum. And this was a higher low in price, but a lower low in momentum. Not a good look, actually. Very, very bearish. And what this to me does says, hey, look at the weekly. We've got an outside weekly reversal candle, and price is likely to head to the 40. It has not tested this blue line quite some time, and the PPO is still very bearish and heading to the 0 line. This could intensify, break down, come all the way to 216 before reversing, and that would be the best buy. In a trending market, which this has been for a long time, she'll come back into the 40, catch a bid, and move higher, and ultimately get this blue line back above the red line. And as long as the blue line's below the red line, you have to assume sell the rally on this market. It just has to be the case until we get to the 0 line. Then you can be more aggressive. We'll take a look at IWM, which is another one that I think is coming into play, coming into the 40 this week. That's a bearish reversal candle, close at low on week. Again, I'm happy to talk about this trade too. This is one that I'm looking to enter. The sell was up here. We've done the whole balance area thing now for 6 months. Right, I'm going back to basically February. We've been at $200, and we're coming into August. So they're going to have to make a decision here real quick. Let's turn after hours on just so you can see some of the difference here. So they even set the high here pre-market, which is very interesting. I don't like those highs. But yeah, I mean, there's 1, 2, 3 touches already on this trend line. A tag here at 213 sets the higher low. They could certainly reverse. We do have, basically no bullish momentum divergences here. Even though it's a higher low, it's a lower low in momentum. Even this higher low was a lower low in momentum, and that's the third one. So again, I'm anticipating this bearish sentiment to resolve in the coming week. I don't believe on a major ETF you give up the 50 fall 8% in a week into a rising 200 and find zero demand. That's not what is likely to happen. What's likely to happen is you'll find demand at this trend line, bounce, maybe come down, set another low, but eventually either you find demand at 207 after breaking it and recapturing, find demand at a rising 200, or find demand at this trend line. That's what's more probable to happen. You're still in balance. Nothing has changed that. We are not breaking out of balance. We can, but we have not yet. And while you're in balance, the assumption is you stay in balance. That's the high probability bet. So that means this is the buy. I entered on Friday and I entered on Thursday using this doji, using this line here, right? Like this is where you want to be a buyer. 216. That's a good price. And to look at this, you have this outside candle, so you have to zoom in to the hourly and you start to see what's really happening here, right? It's one of those broadening formation or where price reaches its quote unquote destination and then expands out in time, and price something like that, right? So I'm expecting one more low, come into this 214 level. And you see it on the daily 1, 2, 3. On the third day, they're going to come down here, tag this 214 level in reverse. I think the 200 is way too obvious a target, and it's not reached. So I do think the best opportunity is in this sector, even if this is a trapdoor type scenario where they gap and go on Monday, slice right through the 200 and 207. I think that's the buy. Right? I don't think after coming down 8% with no bounce on a major index that your assumption should be that she's going to drop further from there, right? So again, I think IWM's got a lot of opportunity. I'm using to play it via a TNA, but I do think that this is the ETF to play right now. I don't think it's Qs. I think you got to let the Qs fall back. And let them do what they're going to do. I don't think it's SMH yet. I think SMH will have her time, but I'm not so convinced it's right now. And yeah, I think that this is the play, especially the closer we get to the bottom of balance. If you're talking about a swing trade, those have the highest probability swing trades, right? The closer you get to balance, the bottom of the balance, or which is ultimately demand, the better the swing trade. And even if you had sold here or here, when the 10 was lost or the 5 was lost, like we look for in the PPO bearish cross, you would have had a nice little swing trade. And that's what we're looking for again, something to just get us back to the top of balance and ultimately break out in the fall or not, right? Or break down. At some point, this will move a lot. And right now, the odds are favoring the bears, but I do think that changes. All right, let's take a look at some individual stocks. I do like NIO quite a bit. I do have the weekly count as still searching for one more all-time high. We have a very steep 2, shallow 4, reset PPO to zero line, bullish cross, a bearish cross here isn't the end of the world. We are still in balance, all within this, the largest ranged candle when she bottomed, right? With the most volume, this little, bearish candle, but this lower wick with the volume showed that when they broke here and reversed, you kind of had this look below and fail, target the top of this candle, boom, $50. They couldn't close above it. Now they're back inside. So this is the first attempt. This was the second attempt at the bottom. Maybe they give one more attempt to go all the way to the bottom of this balance, even set another low. They could also just fill this gap at 38, 60, 62, 64 area. But either way, once we get down to 38 to 32, it's a very strong buy. And it will, as I look for PPO to reset to the zero line and then start going sideways, that's what we need. We don't have that yet. We're very close, and we still have this, bullish momentum, divergence, but still a bearish momentum. And, this is not lost on me, right? So we could certainly be in a descending channel, and we have to come down and break this low one more time. Again, that's possible. I'm not assuming that just yet, because I do see an impulsive wave here. 1, 2, 3, 4, 5. This little triangle. And then, look for a retrace here into this demand zone where the weekly gap fill is. Anything below 40 is a buy now. And the way that you would likely want to do this is wait for a daily reversal candle like you had here for the A leg. And once we get the reversal candle, you can buy the next day. Put your stop here, and you'll have clearly defined risk reward. Until you have good reversal on volume, you can't identify where you're wrong. If you can't identify where you're wrong, you are naked in the trade. It will become emotional. It's not wise. So I will be looking to scale into this this week at 39.98. I will say I did take a trade here on the 12th, or no, sorry, the 15th, and then got stopped out on Friday. And yeah, I just, again, playing against this low, this 42.73 was broken, right? And that was enough for me to say, look, I don't want to be in this trade anymore. If we were to hold this, if this little ABC was going to be it, then we shouldn't be revisiting this. If this 50% retrace, 42.88, is all it would take, and there's enough demand here to start moving price higher, then we'll be rallying from here, and we simply did not. So I'm okay exiting, going home flat. I didn't make any money on this trade. I didn't lose any money on this trade. And we'll continue to scout and wait for an entry now that this reversal has been invalidated by closing below and printing below. You look for the next fib or potential demand area, which is down here. We definitely have, a couple other trades that are in the tech area. CRM's one. I'm looking for a revisit down here. We gave up the 40. This is obviously supply still, but she set a higher high. So even though she set a lower low down here, she set a higher high up here. And that's very bullish to me. So I'm going to let this one play out. I do think you're still far from risk, but I think coming back down here is certainly worth it. I do see the PPO cross. We are now pulling back into the red line. This is what provides opportunity. And we're still above the 40. So this is one to watch. Yeah, so another one I like this week is Amazon. We do have a little bit of risk here in the sense that we have this, look above and fail look, but we have a bullish divergence in momentum, which I like, a higher high in momentum and price here, which is very bullish, a 1-year base, a breakout above the base, and then a pullback is to be expected, but the momentum is on higher highs. So I like all of that. She did close the week at low on week. This is a free fall. This was also to be expected. I will be looking to buy at this price, the 40 and this gap. So the 35.11, your risk is 4.5%, right? The closer you get to this blue line and this blue line, the better the risk reward gets. Now, I'm not saying you should just blindly buy at these lines. What I'm saying is you can wait for a reversal at those lines, or if you're super aggressive, you can accumulate at the 40 or at the longer term weekly trend lines, like the weekly 10, for example. So she captured the 10 here and has not back tested the 10 yet. So coming back down to 3,400 is a very strong buy. In no way is that a sell. Now, if you give up 3,200 give up the 200 and give up 31.77, then we're in trouble. But I mean, she could come all the way back down to this POC, right, which is the point of control, which is where you take all of these shares traded. This is the average price. If you give that up, then I will call into question the bullish trend. But right now, these dips are to be bought. The PPO on the weekly is telling you that. But one thing that is of concern is, the PPO on the monthly is curling down. And every time it curls down, it tends to take a while before it starts going higher in price again, except here, right? But this is the one you had to wait for. And this is a high and a lower high on the monthly in momentum. So, that is the one concern, is that this isn't a bearish configuration on the monthly. That is the concern. And there's time left in the month where, this could be it type of scenario, right? Look above and fail, false breakout like you had here, and then they come all the way back down. 14% correction. Set your high or low, right, relative to 2,881, and then rally from there like they did here. That would not surprise me at all, right? This being the start of like a 2-week pullback, something like that. Coming back into these moving averages and then rallying from there. But Amazon I like a lot. I still like Twitter, but not this week. And ENPH certainly is on the list. ENPH is in a weekly pullback, and you will have to wait until we get some demand on the daily, but we're getting close. I think the closer we get to 150, as long as we hold this 146 high, it's a buy. But this certainly could get ugly below 146. So ENPH is on the list. I definitely like it a lot this week. And there's a couple in here that I haven't shared with anyone before. So let's take a look at CHD. I think this is certainly in play this week. Either we get a breakout finally, or we get this pullback. But the weekly PPO, bullish cross, reset to 0, bearish cross, required for a wave 2 ABC. And then this is recapture the 40. Looks good to go to me. Could come back down one more time, could also break out, but keep an eye on CHD this week. And then NEE triangle already breaking out, volume coming back in, but we still do have this bearish divergence. So she could get rejected up here, set a lower high, and then come all the way back down and then rally from there. I'm not sold on the breakout yet, but I love this look, right? I love this look. And if you take this line from the top, right, she has broken out. Okay, so you can view this either way. But monthly PPO bearish is very ugly. So again, could go either way, but this is a triangle breakout. And right now she could be heading back up to 87 or at minimum 83. And if you look at just risk reward, something like this, you got 2-to-1 risk reward on a dip back into 76. So definitely a buy at 76. And then APA is the last one, getting very close to this long-term trend line again in the 200. So yeah, that's all I got for you guys this week. If you like the content, hit the like button, subscribe to the channel, check us out on Twitter, and hope you guys make some money next week.